Hey, what's up, everyone? Welcome back to FinZergy, the channel that helps you take control of your financial future. I'm your name, and today we're going to tackle one of the most common questions I get asked. How do I start investing with only $100? It doesn't matter if you're just getting started or if you're looking to take the first step toward building real wealth. This video is for you. We're going to dive into simple, actionable tips on how you can turn that first $100 into something bigger. But before we get into the details, make sure to hit the like button, subscribe to the channel, and ring that notification bell so you never miss out on my best finance tips. All right, let's get started. Step 1. The power of starting small. Let's start with the big idea. Investing is all about consistency, not about how much money you start with. So many people think they need thousands of dollars to start investing, but that's simply not true. In fact, I started my own investment journey with just $100, and look at where it took me. The first step is to change your mindset. You don't need to wait until you have thousands to get started. What you need is consistency and the discipline to continue investing over time. If you focus on the long term, your $100 can be just as powerful as a larger investment. Here's the magic. The earlier you start, the more time your money has to grow. Even small amounts invested regularly can lead to big results because of something called the compounding effect, your money working for you. So, let's break down how you can get started with that first $100 and begin building your wealth. Step 2. Choosing the right investment. Now, when it comes to investing $100, it's important to choose the right place to put your money. There are several ways to invest with small amounts, and I'm going to walk you through some of the best options. First, let's talk about stocks. A lot of people think that stock investing is reserved for people with a lot of money. But you can actually start buying fractional shares in major companies like Apple, Amazon, or Tesla with as little as $1 per share. Platforms like Robinhood, Webull, and eToro allow you to buy fractional shares, meaning you don't have to buy a full share to get started. Next up, ETFs or exchange-traded funds. ETFs are collections of stocks, and they allow you to invest in a variety of companies with just a small amount of money. The beauty of ETFs is that they give you instant diversification, which lowers your risk. With $100, you can invest in a broad market ETF like the S&P 500 or a sector-specific ETF like tech or renewable energy. Finally, let's talk about robo-advisors. These are automated platforms that help you invest by creating a portfolio based on your financial goals and risk tolerance. Websites like Betterment and Wealthfront can help you invest with very little money, and they do most of the hard work for you. But what if you're not into the stock market? There are other alternatives too. Peer-to-peer lending platforms like Lending Club allow you to invest in personal loans and earn returns by lending money to individuals. Again, you can start with just $25 or $50. So, where should you start? If you're completely new to investing, I recommend going with an ETF or a robo-advisor, as they offer built-in diversification and are less risky than picking individual stocks. Step 3. The importance of long-term thinking. Now that you've made your first investment, it's time to adopt the right mindset. Remember, investing is a marathon, not a sprint. While it might be tempting to check your investment portfolio every day, the key to building wealth is patience. The most successful investors are those who don't panic during market dips and who consistently invest for the long haul. When you invest with a long-term strategy in mind, you're allowing your investments to grow, and that's where the compounding effect kicks in. Let me give you a simple example. If you invested $100 in the S&P 500 and it grew at an average annual return of 8% per year, in 10 years, your $100 would turn into about $215. In 20 years, it would turn into about $466. And the longer you keep it invested, the more your money will multiply. This is why it's so important to think about time over timing. Don't wait for the perfect moment to invest. Just get started now. And make sure you keep investing regularly, even if it's just $10 or $20 a month. The small amounts add up over time. Step 4. Automating your investments. One of the best things you can do as an investor is to automate your investments. This takes the emotion and guesswork out of the equation and helps you stay consistent. There are 2 ways to automate your investing. First, you can set up automatic contributions on your brokerage account. Many platforms, like Robinhood and Fidelity, allow you to set up recurring deposits. That means every month, you invest $25, $50, or even $100 without thinking about it. Second, you can invest using dollar cost averaging DCA. This strategy involves investing a fixed amount at regular intervals, regardless of the market conditions. The beauty of DCA is that it reduces the impact of market volatility. Some months you might buy when the market is low, and other months you might buy when it's high. Over time, this strategy evens out, and you buy more shares when prices are low and fewer shares when prices are high. Automating your investments helps you avoid the temptation to time the market, which is almost impossible to do successfully. Plus, it makes investing a habit. Step 5. Tracking your progress and adjusting. Lastly, it's important to track your investments and adjust your strategy as needed. While you don't need to check your portfolio every day, it's essential to review it periodically. Apps like Mint and Personal Capital are great for tracking your investments and seeing how your portfolio is growing. They'll give you an overview of your net worth, investment performance, and help you stay on track with your goals. As you grow your wealth, you may want to reassess your risk tolerance or diversify into other assets like real estate or bonds. That's why it's important to continue learning and adjusting your strategy over time. Remember, your investment journey is a process, and every step you take is bringing you closer to financial freedom. So there you have it. You don't need thousands of dollars to start investing, just $100 and the right strategy. By starting small, choosing the right investments, thinking long-term, automating your contributions, and tracking your progress, you can turn that initial $100 into something much bigger over time. If you found this video helpful, make sure to hit that like button and subscribe to the channel for more tips on how to build wealth. And let me know in the comments, what's the first investment you're going to make with your $100? I can't wait to hear your plans. Thanks for watching, and remember, the best time to start investing is always today. Until next time, keep growing your wealth, and I'll see you in the next video.